When you look at the U.S. jobs, when you look at trades, I mean, how many times will the Fed hike next year? Is this, is it going to be a little bit more than the markets expect?
Well, it'll be a little bit more than the markets expect if we're in a shock-free environment. The Federal Reserve seems to be moving towards quarterly rate hikes. We have to think about this as a rising hurdle for all risk assets. We're talking about rate hikes 8 through 13, potentially going on through the end of next year. Again, in an environment that doesn't change massively from the perspective of external issues that might affect the Federal Reserve or some massive inflation surprise, which is unlikely.
Okay, Kully, where is the biggest risk coming from? And where, do we go back to trade, or is there something uglier out there?
There's always the ever-present risk of geopolitics that is around inflation, of course. Inflation has been still relatively benign, but picking up a little bit. You would expect, as the job market continues to tighten, that inflation would start to pick up. We've been talking forever about the Phillips curve breaking down. At some point, something's got to show up, right? And then, of course, there's a slowdown that's happening around the globe for GDP numbers, and that will have an impact as well. So I think those three things are probably the biggest, and trade as well.
Steve, when do we start talking about Jackson Hole, and do you think there's going to be any divergence from the message there?
Well, I'm not sure that the Jackson Hole event is going to be the one that really shows us. I think they're going to be focused in on what is the neutral policy rate, how has it changed, and I think that there's just lots of underlying evidence that the U.S. will eventually head to a classic, if modest, overheating. When you take a look at, you just mentioned the average hourly earnings data, and, this sort of measure of what the average hourly pay is on, a particular type of worker is just sort of not at the leading edge of catching changes in compensation. If we take a look at benefits costs, if you take a look at variable compensation, if you take a look at the employment cost index, it's low, but it is in a convincing acceleration. And you have to take a look at the U.S. economy, where you have unfilled job openings higher than job seekers. Now, again, I don't want to just create any kind of alarm here, but the trajectory over the next couple of years, will be bumpy if we continue on that path.